Today, we're diving into one of the best ways to make passive income, ETFs for long-term passive income. If you're looking to build long-term wealth and generate passive income, ETFs can be a fantastic tool. Over the next few minutes, we'll break down 10 top ETFs that focus on dividend-paying stocks, bonds, and other assets. We'll talk about what they are, how they work, and what you need to know before hitting that buy button. First up, we've got the Vanguard Dividend Appreciation ETF, or VIG. This ETF is all about dividend aristocrats, companies with a proven track record of increasing dividends year after year. The beauty of VIG is that it not only gives you passive income, but also offers potential for growth. It's like a raise you don't even have to ask for. Next on our list is the iShares Select Dividend ETF, or DVY. If you're all about that high-yield life, this one might be right up your alley. DVY focuses on U.S. stocks that pay out some of the juiciest dividends. Think of DVY as the ETF that prioritizes income over everything else. Higher yields can sometimes mean higher risk, so do your due diligence. Now let's talk about the Schwab U.S. Dividend Equity ETF, or SCHD. This ETF focuses on high-quality, dividend-paying U.S. stocks with a history of consistent dividend growth. SCHD shines with its incredibly low expense ratio. That means more of your money is working for you, and less is going towards fees. For long-term investors, those low fees can make a significant difference in your overall returns. Let's switch gears and talk about bonds with the iShares iBox, or High Yield Corporate Bond ETF, or HYG. This ETF invests in high-yield corporate bonds, offering higher yields to compensate for increased risk. Bonds can be a great way to diversify your portfolio and generate a steady stream of income. If you're looking for broad exposure to the U.S. bond market, the Vanguard Total Bond Market ETF, or BND, is your go-to. This ETF holds a massive basket of U.S. bonds, from treasuries to corporate bonds to mortgage-backed securities. BND is the ultimate diversifier when it comes to bonds. This diversification helps to reduce risk and provide a more stable income stream. It's like the ETF equivalent of having a little bit of everything in the bond world. Let's move on to real estate with the Vanguard Real Estate ETF, or VNQ. This ETF invests in a diversified portfolio of real estate investment trusts, or REITs. VNQ gives you exposure to income-producing real estate properties without having to buy actual properties yourself. Schwab US REIT ETF, or SCHH, is another fantastic option for those looking to invest in US-based real estate companies through REITs. Similar to VNQ, SCHH provides exposure to a diverse range of real estate holdings. SCHH shines with its incredibly low expense ratio. This makes it a cost-effective choice for investors aiming to maximize their income from the real estate sector. Lower fees can really add up over time, making a significant impact on your long-term returns. Now, let's talk about preferred stocks with the iShares Preferred and Income Securities ETF, or PFF. Preferred stocks typically offer higher dividends than common stocks, but don't come with the same voting rights. PFF focuses on preferred stocks issued by financial institutions and other sectors, providing a diversified way to tap into this unique asset class. If you're looking for an ETF that hones in on U.S. preferred stocks, the Global X U.S. Preferred ETF, or PFFD, is worth considering. This ETF targets U.S.-listed preferred stocks and aims to deliver a high level of current income. Just keep in mind that PFFD might be slightly less diversified than PFF, since it focuses solely on the U.S. It's a great option for those looking to maximize yield. Last but not least, we have the Global X NASDAQ 100 Covered Call ETF, or QYLD. This ETF uses a strategy called covered call writing, which involves selling call options on the stocks in the NASDAQ 100 index. This strategy generates premiums that are then distributed to investors as monthly dividends. So there you have it, 10 amazing ETFs that can help you build long-term passive income. The best ETF for you will depend on your individual financial goals, risk tolerance, and time horizon. It's essential to do your research, compare different options, and consider factors like dividend yield, expense ratios, diversification, and total return. If you're not sure where to start, don't be afraid to reach out to a financial advisor. Thanks for watching, and don't forget to like and subscribe for more investment tips and tricks.